The sound is okay?
Sound is say something.
Say something.
Yep, we're rolling.
All right. Great. Okay, just gotta prepare Karl-Mikael. Hi, and welcome to Hedge Fund Manager. I'm Karl-Mikael Siding. Let's take a look at LVMH today. So it's the fashion retailer, the champagne producer, the all-around luxury goods manufacturer. LVMH is the world's largest company in this area, and the stock price, as you can see here, it has recently crashed. After a tremendous run, it's come down by almost 50% over just the last year. So perhaps this is a good opportunity to invest in LVMH, but let's take a look. I've brought up LVMH here on Koifin. I always use Koifin for my free online research on companies. Let's look down here to the left. You scroll down to financial analysis, you click that, you can choose between a lot of different alternatives. Highlights is where you get all the interesting parts and none of the too much details. It always goes to annual numbers first, and as you can see, you only have the last 3 years, but if you hover above the graph to the left, you'll actually get 10 years of data. As you can see, LVMH has grown pretty quickly. It's doubled in size over the last 8 to 10 years. It did have a bit of a stumble during COVID when, in effect, global trade was just completely stopped for a while. So this is the actual annual revenues. Let's instead look at the growth rate. So this is the growth rate for sales for LVMH. Historically, it's been around, I would say, 10% per year. It had this year of the stumble, but then a comeback with 40% growth. So on average, these 2 years were still around maybe 15% growth. Even the year after was more than 20%, but now it's come down, and it seems as if we're facing a bit of a setback here in 2025. But overall, I would say this is a 10, like look at the chart here, a 10 to maybe 15% annual growth rate company. Remember, right now in 2024 and 2025, we're probably facing a bit of a cyclical downturn, and that's why we're seeing these weak numbers. But in general, LVMH, being a luxury goods company, a good company that is also acquiring other smaller luxury goods companies, and they are taking, in general, like wallet share from the global consumer community. As the economy grows, the proportion of people having enough money to afford these kinds of goods increases. And that's why LVMH typically is growing quite a bit faster than the general economies. We can more or less rely on a 10 to 15% annual growth rate. Then let's look at the net income margin. So how are they doing here? Well, as you can tell, they are increasing their margin over time. So we started out here at about 10%. On average, I would say we're maybe at 14%, 13.5%, 14% for this period. It did hit a peak in 2021 of almost 20% and come down a bit recently from 20 to 15%. But I would say that on all things considered, we're seeing a bit of a rising trend here, which is something we should expect from the category leader and the largest company. They have scale effects, they have scale advantages both in terms of purchases and in marketing and distribution. So we should expect this 2025 margin of 15% to actually be at the low end of what they will achieve over the coming years. And that means we should actually expect faster earnings per share growth than sales growth. If we look at the growth rate here for net income, it's a little bit more difficult to actually discern from the chart itself. We might have to go to the actual table of numbers. And if we look here, we can see that they had a growth rate of 17% in 2022 and then 8% in 2024. Due to the cyclical downturn, we had a negative growth rate. But I would say that looking at the chart of growth rates here, we should expect somewhere around 15, maybe 20% per year. But let's say 15% per year, which is more or less exactly a doubling every 5 years. So we should expect earnings per share to double every 5 years. What should that be worth? Well, let's see what the market has awarded LVMH in terms of valuations over time. This is price earnings, and you can see it's right now at 23, which is a bit on the low side for LVMH. It did reach a peak here. No idea why. I mean, why would you award peak multiples on peak earnings, as if they were going to grow in a COVID fueled pace forever? This is very weird behavior of the market, and that's exactly what we as value investors can take advantage of. Perhaps shorting it here, perhaps buying it when it's more towards the lower end of valuation, as it is now. But let's scroll down here to this place, multiples. This is where you can look at a huge range of different multiples, but I still want to look at price earnings last 12 months. So this is the same chart, backward looking. And 22 times. Remember that over long periods of time, the average market valuation for the average company growing at about the average pace of the total economy is typically 15 or actually 16 and a half backward looking over the last 12 months. So comparing apples to apples here, it's about 16 and a half, and this is at 22.8. So this is almost 50% higher than the average company. And is that good or bad? Well, considering that LVMH is growing at a pace that it's almost double the economist's growth rate, being valued at less than 50% higher multiple than the average company, and this being like the category leader, the absolute quality company in this respect, they definitely should be worth more than 50% over the market average. This is a cheap company. It's not very cheap, it's not super cheap, but it's definitely fairly to quite attractively valued. But considering that we are in a bit of a negative share price environment, and probably, as you can see here, it's been going down in waves. People are giving up on the share in waves. and we're now at a critical period, critical level here where it might break down even further. So I expect if we go down below this level, then technical analysis would point towards maybe going all the way down to maybe 450 or something like that. But that would be very attractively valued. Considering that we are entering a weak spot for the general economy, and we're seeing a negative trend for stock markets in general, I think that this stock will become even cheaper than it is. It's already attractively valued, but we are probably likely to get an even better opportunity, maybe going down from the current 570 down to maybe 450, where I think it would be a great opportunity to scoop up some LVMH shares. All right.
Nice.